Please be sure to check out our website, which is www.albanyparkcapital.com. I'll also post it in the chat as well so that y'all can access it really easily. There we have, again, really interesting curated real estate investment related pieces, as well as direct access to our investor portal. One more thing before we transition to the next slide, there is an opportunity towards the end for a Q&A session. So please be sure to drop any questions that you may have in the Q&A section, which you can find at the bottom of your screen. And we'll be sure to answer them again towards the end. So as I mentioned, feel free to ask your questions as we move through the presentation. So just kind of moving on, again, just doing a little bit more housekeeping here. This webinar is for information purposes only. And so please note that this is not an offer to sell, nor is it a solicitation to purchase an interest in LSC Timberwalk Fund. Please be sure to consult your attorney or financial advisor before investing, as investments can only be done by accredited investors. Though the private placement through the private placement memorandum. Again, if you have any questions around that piece, please be sure to ask us, and we're happy to clarify. And now, without further ado, I would love to introduce you all to Junaid Noor, who is our CEO and fund manager. He is the founder of Albany Park Capital, is trained as a CPA specializing in real estate, and has 30 years of real estate experience, 20 years of experience in due diligence, underwriting, financing, and development for a variety of other asset classes, and is currently developing $30 million in projects. Fun fact, he's also the host of Cigars and Syndications Real Estate Podcast. So welcome, Junaid. The floor is all yours. Thank you so much.
Thank you so much, Amberine, and thank you everybody for joining us tonight. So before I get into the specifics of the opportunity itself, I want to talk a little bit about Albany Park Capital. The reason I founded Albany Park Capital was because I have, like Amberine said, I have about 30 years of experience in all aspects of real estate, multifamily, single family, selling real estate, commercial real estate, development, everything. So what I wanted to do is I wanted to share my experience with you, the investor, and I wanted to make sure that you understand what are the best ways, what are the best opportunities, and educate yourself so that you can make the best decisions for yourself. So my first and foremost priority was to educate our investors. Secondly, what I wanted to do was be able to provide our investors with a best-in-class real estate, high-quality real estate assets, which would provide passive cash flow and protect capital. One of the ways that we are doing that is by partnering up with Lone Star Capital. Now, Lone Star Capital is a best-in-class operator of multifamily properties. And with Lone Star Capital, we have about 300 investors. We have about $292 million in real estate purchased. We have about over 2,500 doors, and we've been able to return about 40%, a little over 40% average returns to our investors. Properties, and this is one of the previous properties that we purchased. This is Crnbrook Forest. This is a 261 unit development in Northwest Houston. We purchased this as a value add strategy. We purchased it for about $17.9 million. We acquired this July 2018, and we wound up selling it December 2021. On this one, we were able to realize gross returns of a little over 23% for our investors. When we picked up this property, it had about 30% occupancy, and when we sold it, it had about 90% occupancy. There's another property that I want to go over very quickly. It is called Verandas at Bear Creek. It's a 160 unit property. And the unique thing about this property is this is right next door to the Timberwalk property. For this one, this is also a value add strategy. We acquired this one at about $12.8 million. We acquired this in June 2019. We refied in October 2020, and then right now it is under contract to sell. We anticipate closing in May. Now, this one, we were able to realize gross returns of about 37%. Value creation with this one is that it was 80% occupied, just like Timberwalk is when we took it over, and we were able to bring it to 100% occupancy. But it wasn't just the occupancy, we were able to create value through other management aspects as well. Now let's get into Timberwalk. Why do we like Timberwalk so much? Well, number one, Timberwalk is an off-market deal. Now, that's not the only reason to buy a property, but it really, because the market for multifamily properties is so hot right now, it prevents any bidding wars. Bear Creek is a very good area, mid-upper workforce area with extensive single-family residential. The interesting thing also about this is that the seller is out of town and they self-managed it. Now, it's one thing to be an out-of-town owner and have a property manager in town, but they decided to manage it from out of town, which is, as you can imagine, very difficult to do. Now, this property has seen, or this area has seen, about 13% rental growth in the past year alone. Yardi projects this to be 4% annually for over through 2025. The population growth is very strong in that area. The job base is incredible. It's not a lot of new supply, but a lot of new demand. The neighborhood sales of homes, single-family homes, are between $225,000 to $340,000. Now, this is important because if you're in an area where the single-family homes are between $100,000 and $125,000, where the mortgages are actually low, then people tend to want to buy the single-family homes and not want to rent an apartment. So because these homes are so high in prices, the demand for apartment rentals is much higher in that area. As you can see, let me pull out my handy dandy laser pointer. And as you can see, the market shows growth about 5% for 2023, a little over 5%, 5% for 2024, all the way through 2026, which is about 4%, 4.5%. However, we still underwrote this property conservatively at about 3%. Moving on. This is the site overview of where the property is. As you can see, this is where the home values are over here of 250 to 290, 270 to 350. This is a retail corridor over here. This is Timberwalk right here. And right here is where the Bear Creeks and Veranda is. Just to look at it very quickly from a Houston perspective, it is in the northwest area of Houston. This is a capital expenditures budget. I want to just go through this really quickly. Just want to let you know that we already have the capital. So we walked all of the units and we know exactly what upgrades need to be done in every unit. We have a little over $3.5 million expenditure budget. It is already approved by the bank. It is already sitting there with the bank. So as soon as we start remodeling, we can start making draws with the bank. This is what the interiors look like. This is a typical interior of the Timberwalk apartments. Now, interestingly enough, this is the model. As you can tell, the model doesn't look anything like what you would be renting, and it's a little bit deceptive. So what we're going to try to do is we're going to try and bring these units up to model standards as much as possible. We walked the exterior, everything looks good. The only thing is that we need to bring the electrical up to code. The electrical, that's already in the budget for our rehab. Now, this is our value enhancement plan. The way we intend to bring value is that we're going to do interior upgrades, and we're going to do interior upgrades to about 75% of the units will be a premium upgrade, which means we do a backsplash, hardware, lighting, baseboards, etc., minor stuff. 25% will be granite, stainless steel upgrades. There's a reason why we do this. And the reason why we do this is because when we do 25% elite upgrades with granite and stainless steel, we can raise the rents much more. And then when we go to sell the property, the buyer has the opportunity to raise more of the units to elite upgrades. So therefore, they look at it as a value add as well. We will be installing washers and dryers in all of the units. That just enhances the rent. And then we're going to do some amenity enhancements. 107 reserved parking spots at $30 a month doesn't cost us anything, but gives us more income. And then, of course, the operational upside. Like we said, Bear Creeks at Veranda this is a much nicer property than Bear Creeks at Veranda. which is the one we own next door, but Bear Creek's commands $100 per month higher rent. These are the sales comps. One of the potential investors had said that, boy, you guys are getting into this property at very expensive. But if you look at the sales comps, the average of comps of properties built in 1983 are about $148,000. These are sold properties or under contract. We are getting this property at $114,000. This is a sensitivity analysis we do, and I'm going to just go through it really quickly. If you'd like to go through it in more detail, please feel free to set up a one-on-one call with me. But we kind of look at this and we say, okay, you know, we're projecting about 1% bad debt, 5% vacancy. We're going to get about a 7.5% cash flow on average. But in the event vacancy goes to 6.5% and bad debt goes to 5%, we anticipate cash flow to still be at around 6%. So here are the investment highlights. We are targeting an internal rate of return at 16.5%. Now, and this is the reason that I went through the case studies where we were able to produce a little over 23, 24%, but we are conservative and we stay conservative with our projections. We would much rather under promise and over deliver. So we're targeting a 16.5% return. We will be giving out distributions starting in July on the 25th of every month. We are providing 8% preferred returns to our investors and an 80-20 split for returns over 8%. Basically, what that means is that in the event we refinance or we sell the property, our investors get their capital first. Then you get an 8% preferred return. And after the 8% return, preferred return that you get, we split the remaining returns 80% to the investors, 20% to management. We anticipate refinancing in about 18 to 24 months because that's what we've done before, but we still underwrote this property at a 36-month refi. And like I said before, the investors will receive 100% of the original capital back. But once you receive the 100% of your original capital back, you're not out of the picture. We still own the property. And we get accelerated depreciation. So talk to your financial advisor, but for a $50,000 investment, anticipate getting about $25,000 of depreciation in the first year. So what does that mean? How much do I make and when do I make it? Cut through all the crap. All right, so if you invested $50,000 as an initial investment, you should expect a little over $2,000 in year one, which is about 4%. In year two, you should get a little over $2,500, which is about 5%. In year three, you should anticipate getting about a little over $3,600, which is about 7%. Now, again, we may be able to move this further sooner into the future. We may be able to move this sooner into 18 to 24 months rather than 3 years, but we underwrite it for 3 years. In year three, we refinance a property and you get $66,990 on the cash out. So the total you receive is $75,235. So if you receive $75,235, you invest at $50,000, divide the two, your total return is $25,235 or 50.47%. Over 3 years, 16.5%. So why did we choose Lone Star Capital? Lone Star Capital has about 100 plus years of senior management combined experience. They're dedicated to one market. That's the Texas market only. So they know that market really well inside and out. 2,500 plus units of doors that we have in Texas, $90 million of equity invested. And we have 12 multifamily properties that we've purchased so far, $292 million of assets, and 3 properties that we've taken full cycle. That means we've purchased it, rehabbed it, refinanced it, or sold it. And of all those properties, we've been able to return a little over 40% to our investors. Now, here's a track record of results. As you can see, all of the properties are Houston, Lubbock, Texarkana. So we're really focused on the Texas market. And these are the properties over here. One of them, it was a 69% return, but the ones in Houston returned around 29% for this one, 23% for the Crnbrook Forest one. This is the investment structure. Our investors on this call are over here. You'll be investing in this fund, which is called the LSC Timberwalk LLC fund. Albany Park Capital is the fund manager. and the fund will invest in Timberwalk LLC, which owns the property. I know this is a little bit complicated, but this is one of the regulations that the SEC requires, that we set it up this way in order to be able to issue, in order to be able to issue as a fund, invest as a fund, and not have to issue securities on the open market. Lone Star Capital is going to be the asset manager, so we will be investors in the property, in the LLC that owns the property.